Hi everyone. So for my research paper, I intended to investigate the workings of the Garmin Stock Exchange because I've been an app consumer for many years. So I wanted to understand why the company was rated A plus overall for financial strength, which demonstrates the reliability of the stock in comparison to others in the market. Garmin was founded in 1989 in Lenexa, Kansas by electrical engineers Gary Burrell and Min Kao. The company was originally called ProNav and made its startup with GPS technology and sold their first product called the GPS 100 AVD to the U.S. Army for $2,500 in 1991. And then the company slowly started to grow after they provided a need which other products could not fulfill. So then by 1995, Garmin sales had reached $105 million and achieved a profit of $23 million. By 2000, Garmin had sold 3 million GPS devices and was producing 50 different patented models through a network of 2,500 dealers, distributors, and partners in 100 countries around the world. Then they started public trading on NASDAQ on December 8, 2000, and the founders' shares accounted for 45% of the stock. Garmin lies in the electronics equipment industry. The company specializes in GPS technology and provides tracking technology for many different activities such as automotive, aviation, marine, outdoor, and sport activities, which are its five main markets. The company started with the marine GPS and then over time started altering their technology to fit different needs for different consumers. They very innovatively broadened their range of consumers through close study of consumer preferences, particularly those who performed heavy physical activity. Major competitors of Garmin include Casio and Sharp, which have also created smartwatches that Garmin had originally created. These other competitors have created watches which have features that Garmin does not offer, such as Bluetooth connection and watch-to-watch application. In the company's 2017 annual report, they talk about the separate market pitches for their five business units, which are auto, aviation, fitness, marine, and outdoor. The company then talks about the accomplishments and special features of each of their product lines, which are lesser known to consumers, such as cartography and marine autopilot systems. Also in the report, the company addresses the functions of their products and how they can connect to iOS or mobile Android devices and weather satellites, while also providing consumer access to travel databases and subscription services. Their distribution strategy is intended to increase their global penetration and presence while maintaining high quality standards to ensure end user satisfaction. They list their biggest dealers, which include Amazon and Best Buy. Garmin credits their overall success and product innovations to their research and development team, and they also believe that their vertical integration of manufacturing capabilities in Taiwan provides advantages to product cost, quality, time, and market. They explain how the price of their stock was extremely volatile and can be influenced by factors like new products by competitors or changes in applicable tax laws. They point in their report that the rights of their shareholders are governed by Swiss law, which grants preemptive rights to existing shareholders to subscribe for new issuances of shares and other securities. Paul Coster of JP Morgan rated the stock underweight because he reported that although the company's share of high-end watches has remained stable, volumes in the sector as a whole have declined as the competing company Fitbit has implemented itself in the market due to expanded distribution, channel restocking, and increased gross margins. Charlie Anderson of Doherty & Co. rated it neutral because the analyst discussed the predicted 2020 earnings with President Pemble and had focused mainly on the auto market, which was currently declining. From there, he claimed a neutral position as he felt that while Garmin was expanding in its other industries like aviation, it would take a few years before these changes would generate any real revenue for the company. Nikolay Todorov of Longbow Research rated it neutral because of the growing trend of smartwatches and cellular fitness apps. He was really skeptical of the growth of Garmin's personal fitness segment. Pemble argued that the company was still excelling with the sales of their own hybrid analog smartwatches, and therefore that is their target area of investment for 2019. Woodring of Morgan Stanley rated it equal weight in line, and he recommended this because of the company's revenue of product launches and new product launches was said to essentially help accelerate growth in the back half of the year versus the first half. Pemble was also unable to infer a growing trend of the company's specialty P&Ds when Woodring asked him about it. Ivan Feinseth of Tigris Financial rated it buy, and he strongly suggests buying because of Garmin's recent acquisition of Tax, which was a great fit according to Garmin due to its vertical integration and great product line and technology. As Garmin plans to distribute their new products in the US through existing sport retailers, tax products through Asian and US markets, Feinstein has high hopes for the company's performance. Recently, the brother of the founder of Garmin, Rui Jiankao, sold 1.28 million Garmin shares, which decreased his equity from 5.28% to 4.82% stake. The shares are currently estimated at $105.1 million, which is significant because the date of the sale is unknown, since Cao would have been required to report the change in his investment to the SEC at any date past 2012. In the second article, Garmin talks about an idea for a new product that provides heads-up display for cars in the US. The product will be able to show current speed, speed limit, a red warning icon if you're speeding, and icons to warn of heavy traffic. The creation of this product can directly affect the company's stock market through public perception of the company and the sales of the product, which is definitely risky because there's already head-up displays in the market. In the third article, shares of Garmin jumped to 17% after fourth quarter earnings for 2018 were announced. Garmin's quarterly revenue climbed 4% year over year to $932 million. For full year 2019, Garmin expects revenue of $3.5 billion, up from $3.35 billion in 2018 and well above consensus estimates for $3.43 billion. Pemble, the CEO, called it a remarkable year of revenue and operating income growth and added that entering 2019, we see many opportunities ahead and believe that we are well positioned to seize these opportunities with a strong lineup of products across all of our segments. On April 2nd, Garmin completed its acquisition of Tacx, which is a privately held Dutch company that designs and manufactures indoor bike trainers, tools and accessories, as well as indoor training software and applications. President Pemble says that we are looking forward to leveraging the outstanding expertise and skills of the Tacx team to provide a seamless indoor and outdoor experience for athletes year-round. On April 25th, Garmin was named one of America's top 5 best employers in Forbes 2019 ratings. This list is chosen based on an independent, anonymous survey of more than 50,000 employees. It identifies companies that employees like to work for and would recommend to others based on questions about work-related topics, including working conditions, salary, potential for development, and company image. Cliff Pemble says that Garmin employees are passionate about what they do, and we share a deep commitment to serving our customers and each other. Of the many qualities that make Garmin a great place to work, it is the commitment of our employees that sets us apart. It's the company's third consecutive year earning a place on the list. Lastly, on April 30th, Garmin announced an all-new Forerunner watch series with GPS running smartwatches created for all runners. They announced that the lineup will bring integrated music capabilities, full color mapping, and advanced training, safety, and tracking features to its popular GPS running smartwatches. These new watches will not only track a run but will monitor stats and get to know each and every athlete's performance. Garmin Vice President Dan Bartel says this watch will refresh the company as this watch does most of the thinking for the consumer. These watches will come with a built-in coach that will help consumers with their individual running goals, whether it's for a 10K or a half marathon. Garmin shows the only trend line that is steadily increasing. While Shark Corp's trend line is high, it gradually slopes downward, while Casio 6839, JT Equity, and 2000016 CH Equity all demonstrate a similar trend line. Insider trading is the trading of a public company's stock or other securities such as bond or stock options by individuals with access to non-public information about the company. Since January 2019, there have been 29 total insider trades, and in the past year, there have been 187 total insider trades. Shown below are 3 instances of insider trades by DuBois, Biddlecombe, and Pemble this year. Min Kao is the executive chairman of Garmin. He has made $382,000 in total compensation. Of this total, $350,000 was received as a salary, $256,000 was received as a bonus, and $0 was received in stock options / awarded as stock. The other $31,000 came from other types of compensation. Clifton A. Pemble is the president and CEO of Garmin. He has made $2,432,193 in total compensation. Of this total, $750,000 was received as a salary, $256 was received as a bonus, and $0 was received in stock options. $1,650,083 was awarded as stock, and $31,854 came from other types of compensation. Doug Bosson is the Chief Financial Treasurer and Officer of Garmin. He has made $1,011,000, 158 in total compensation. Of this total, $579,000 was received as a salary, 256 was received as a bonus, 0 was received in stock options, and 400,048 was awarded as a stock. 31,854 came from other types of compensation. Andrew Eckheim is the Vice President, General Counsel, and Secretary of Garmin. He has made $1,406,706 in total compensation. Of this total, $579,000 was received as a salary, 269 was received as a bonus, 0 was received in stock options, and $435,040 was received as a stock. 392,397 came from other types of compensation. Since a high PE ratio means a higher price of shares, Garmin demonstrates the highest estimated growth among its competitors. This could be because of their new product plans and launches, which have kept consumers interested and in the loop. Casey and Sharp have not been as active as Garmin in keeping a strong buyer-to-consumer connection and interaction. The dividend yield shows the annual dividend per share divided by price per share. A higher dividend yield means a higher return on an invested stock, so out of the three, Sharp actually has the highest return. The company's return on equity is 19.79%, which is really high compared to other companies in the electronic equipment industry. If investors diversify their portfolio by industry, they may want to maximize their return in the consumer electronics sector by investing in the highest returning stock. Return on equity is measured against cost of equity in order to determine the efficiency of Garmin's equity capital deployed. Its cost of equity is 10.81%. Since Garmin's return covers its cost in excess of 8.98%, its use of equity capital is efficient and likely to be sustainable. Garmin pays less for its capital than what it generates in return otherwise stated. In total, Garmin has acquired 29 organizations, and their most recent one was Flight Plan LLC on August 29, 2018. Some of their other acquisitions include ActiveCaptain, iKubu, and Fusion Electronics, which are other technological and fitness-geared organizations similar to their own. On February 12th, Garmin announced their plan to acquire Tax, which was a privately held Dutch company that designs and manufactures biking tools and accessories. President Cliff Pemble claimed that Tax brings an entirely new product category to Garmin's fitness portfolio that expands our reach into the indoor training market. Even though Garmin hasn't had any mergers yet, a lot of financial analysts are suggesting a merger with GoPro because both companies target much of the same active customers through their superior capabilities. There's been a recently growing concern over the safety of using wearable devices and smartwatches, such as that Garmin provides, because it increases exposure to radiation. While these wearable devices are being marketed as the next big thing in the health market, they're actually posing a risk as the radiation released by the gadgets can cause eye irritation, headaches, reduced appetite, mood swings, and sleep disruption. Due to this scientific evidence, Garmin is at risk of losing consumers or being exploited for the harm of their products. This discovery is a scientific risk that the company faces, as it is something that has come to surface and it's a whole different level of health, separate from the benefits of the product. In summation, I would definitely consider buying because this company has a very bright future in terms of attracting more investors and keeping a strong consumer base, since they're consistently working to satisfy the needs of their consumers. While the company has not consistently been creating products, they've been working on improving each project and expanding their market, which has caused the company to gain trust from customers and therefore investors.